Look at your portfolio right now. Just look at it. The numbers are probably green, right? The mainstream financial media is telling you that the worst is behind us. They are smiling on screen, pointing to stabilizing interest rates, corporate earnings that somehow keep beating expectations, and a narrative of a perfect soft landing. But I need to ask you something, and I need you to be brutally honest with yourself. Does it actually feel safe to you? Because when I look at the macroeconomic data, nothing makes sense anymore. I am looking at spreadsheets, institutional money flows, and global liquidity indexes, and I am telling you I am overwhelmed. The math is completely breaking down. On one hand, we have equity markets pushing near all-time highs. But on the exact same day, in the exact same economic environment, we are seeing sovereign bond markets flashing warning signs that we haven't witnessed since the absolute depths of the 2008 financial crisis. How is this possible? How can the world's most sophisticated institutional money be pricing in severe, catastrophic systemic risk, while retail and mainstream investors are being told to just keep buying the dip? Am I missing something? Or are we all being led into something massive, something entirely unseen? I have spent weeks tearing apart these financial reports, trying to find the baseline of truth. And the more I dig, the more anxious I become. It feels like we are standing on a frozen lake, and the media is telling us the ice is 2 feet thick, but you can literally hear it cracking under your feet. Let's talk about inflation for a second. The official CPI numbers dictate that inflation is cooling down. That's the headline. But when you track the actual cost of capital, the rising expenses in global supply chains, and the silent devaluation of fiat currency, the purchasing power of your wealth is eroding faster than it was 3 years ago. Why is there such a massive disconnect between the official narrative and the shadow data? And the central banks, what are they actually doing? They are issuing statements of absolute confidence, projecting strength and control. Yet, if you look at their balance sheets, if you track the silent backdoor liquidity injections keeping the regional banking sectors afloat globally, it screams panic. They are printing rescue capital while publicly claiming the fire is already out. I'm looking at these two entirely different realities, and I don't know which one to believe anymore. If the system is so stable, why are global central banks hoarding physical gold at the fastest, most aggressive pace in recorded economic history? What do they know about 2026 that we don't? This brings me to my deepest fear, a fear that has been keeping me awake, staring at global market charts until 3 a.m. I call it the 2026 trap. This isn't just a standard market correction. A correction is normal. It's healthy. You hold through a correction. No, what the conflicting data is pointing to right now is a structural fracture. The trap is designed perfectly because it uses your own logic against you. For decades, as high net worth investors, we've been taught the golden rules of wealth preservation. Diversify, hold blue chip tech, trust the 60-40 portfolio, and rely on the US dollar as the ultimate safe haven. But what if those exact assets, the ones you believe are protecting your family's legacy, are the very walls of the trap? Look at the concentration of wealth in just a handful of massive tech monopolies. The valuations are entirely detached from fundamental reality, sustained only by a fragile web of phantom liquidity. If that liquidity dries up and the bond market is screaming that it will, what happens to those valuations? I am looking at the trajectory of global debt refinancing scheduled for 2026. Trillions of dollars of corporate and sovereign debt must be rolled over into a historically high interest rate environment. The math doesn't work. The corporations cannot afford the new debt, and the governments cannot afford to bail them out without destroying the currency entirely. We are walking into a mathematical wall. And here is the part that terrifies me the most: the illusion of liquidity. You look at your brokerage account and you see millions of dollars in net worth. You think, if things get bad, I'll just sell, I'll just move to cash. But will you be able to? When the 2026 trap springs, when the realization hits the broader market that the underlying architecture of global finance is fundamentally broken, the exit doors will shrink to the size of a keyhole. I am seeing warning signs of unprecedented illiquidity in the system. The bid-ask spreads in traditionally safe bond markets are widening. The institutional buyers are stepping back into the shadows. If everyone realizes at the exact same moment that the paper wealth is an illusion, who exactly are you going to sell your overvalued assets to? The market makers will vanish. I am seriously questioning everything I thought I knew about modern portfolio theory. The safety nets are gone. The data is a maze of contradictions designed to keep capital deployed in the line of fire. This is why I am sounding the alarm today, because the window to maneuver is closing rapidly. You might think you have time. You might think you can wait until 2025 to rebalance. But what if the trap is already set? What if the assets you are holding right now, the ones your financial advisor told you were conservative and safe, are exactly where the smartest money in the world needs you to be, so they can quietly exit out the back door? I am terrified that millions of successful, intelligent investors are going to wake up one morning to find their portfolios locked in a massive devaluation event, completely unable to escape. We need to figure this out. We need to tear down this conflicting data and find out where the real, tangible safe havens are hidden. Because right now, sitting in conventional assets feels like standing on the tracks, blindfolded, wondering why the ground is starting to vibrate. If you have your wealth tied up in the standard financial system right now, you need to listen very, very carefully to what we are going to uncover next, because the realization of what you might actually be holding changes everything.
I know exactly what some of you are thinking right now. You are sitting there listening to the macroeconomic warnings, the systemic fractures in the bond market, and you are telling yourself, I am immune. I am insulated from this because I have moved my wealth outside the traditional system. I hold Bitcoin. I have diamond hands. If that is what you are thinking, I need you to pause. I need you to completely detach yourself from the echo chambers of social media, from the laser eyes, and from the relentless, hyper-optimistic narrative that has been aggressively fed to you. I want you to look at the data with me. Cold, unforgiving data. Because the deeper I look into the on-chain analytics and institutional order flows, the more I realize that Bitcoin is not your life raft. It is the anchor, and the most sophisticated players on Earth are tying it around the ankles of retail investors. You have been sold a story of a decentralized, incorruptible financial utopia, a system free from manipulation. But what if that entire narrative was carefully constructed to engineer the greatest wealth extraction in human history? What if the safe haven is actually the kill zone? Let's strip away the illusion of a free and fair market. Look at the concentration of wealth within the crypto ecosystem. The vast majority of Bitcoin is held by a frighteningly small fraction of wallets. We call them whales, but a better term would be apex predators. These are institutional syndicates, sovereign wealth proxies, and algorithmic trading desks that control billions of dollars. They do not trade like you. They do not buy and hold out of ideological loyalty. They do not have diamond hands. They have cold, calculated exit strategies. When you see Bitcoin pushing past new resistance levels, when the media is screaming that we are entering a new supercycle, do you honestly believe that is organic retail demand? No, it is an orchestrated synthetic pump designed to create a frenzy of FOMO, fear of missing out. They need you to feel euphoric. They need you to deploy your hard-earned capital. Why? Because massive institutional positions require massive liquidity to exit. They can't sell billions of dollars into a quiet market without crashing the price to zero instantly. They need buyers. They need you. They engineer the euphoria specifically to create the exit liquidity they require to quietly offload their holdings into your hands. Every time you proudly buy the dip, you are providing a billionaire the exact mechanism they need to secure their wealth in tangible, real-world assets. You are holding the digital bag while they buy the physical world. And this brings me to the absolute core of the anxiety that is keeping me up at night. The event that everyone in the crypto space looks toward as the ultimate catalyst for unimaginable wealth, the April 2028 halving. The narrative is that the halving creates a supply shock, making the asset infinitely more scarce, and therefore the price must mathematically go to the moon. You have been conditioned to believe that holding through the volatility until 2028 is your guaranteed ticket to generational wealth. But I am looking at the macro timeline, and I am terrified for anyone holding that belief. What if the April 2028 halving is not the beginning of a bull run, but the ultimate, final deadline for institutional liquidation? Look at the macroeconomic cycles converging right before that date. Trillions in global debt restructuring, massive shifts in energy infrastructure, and a global regulatory net that is quietly closing in on digital assets. The smart money knows that the window of unregulated high liquidity extraction is shutting. They are using the anticipation of the 2028 halving as the ultimate bait. They are driving the narrative that you must hold at all costs, precisely so they have a guaranteed, captive audience of buyers right up until the trap springs. By the time April 2028 arrives, the distribution will be complete. The institutions will have rotated entirely out of the digital illusion and into hard physical monopolies, energy, infrastructure, and global dividends. And retail investors will be left holding a digitally scarce asset in a market entirely drained of actual capital. Does this sound impossible? Does it sound like I am just spreading fear? I implore you to look at financial history. The mechanics of human psychology and institutional extraction never change. Look back at the late 1990s, the dot-com era. Millions of highly intelligent investors were absolutely convinced they were part of a new economic paradigm. They held on to overvalued tech companies because they believed the old rules of valuation no longer applied. They had their own version of diamond hands. And when the institutional money quietly exited and the trap sprang, trillions of dollars evaporated. The devastation was absolute. Families lost everything because they refused to let go of the narrative. Look at 2008. The housing market was considered the ultimate safe haven. Real estate never goes down. Until it did. And the only people who survived were the ones who looked at the underlying terrifying data and had the courage to sell while everyone else was aggressively buying. Bitcoin is facing that exact same precipice. The systemic risks are compounding. The regulatory hammer is poised to strike. The whales are silently positioning for the exits. I am telling you this because I am genuinely afraid of what is coming. If you are sitting on a massive Bitcoin position entirely convinced that it is your financial fortress, you are standing directly on the fault line of a financial earthquake. Ask yourself, are you truly in control of this asset, or are you just a pawn in a multi-billion-dollar psychological operation? What if your refusal to sell, your stubborn pride in holding, is exactly what the system is counting on to destroy you? The anxiety you might be feeling right now, that tightening in your chest, that is your rational mind waking up to the data. That is the realization that the safety you felt was an illusion. But there is a way to rotate out. There is a way to take the capital you have right now and move it into the undeniable physical cash-flowing assets that the elite are secretly buying. You don't have to be the exit liquidity for a billionaire. In the next segment, we are going to look at exactly where the smart money is flowing. We are going to look at the tangible global infrastructure that cannot be mathematically manipulated by whales. You need to see this blueprint before the window closes.
I need to speak to you right now. Not as an analyst, but as someone who is genuinely terrified for what is about to happen to people I care about. I have spent the last 72 hours looking at the raw, unfiltered data of institutional wallet movements, and honestly, I feel sick to my stomach. We have been lied to. The entire narrative we've been fed over the last few years, the mainstream media headlines, the sudden approval of ETFs, the billionaires putting laser eyes on their social media profiles, it was never about mass adoption. It was a marketing campaign, a brilliantly executed, globally synchronized psychological operation designed to do exactly one thing: create enough retail frenzy to allow the smartest, most ruthless money on earth to quietly head for the exits. I feel betrayed. I bought into the idea that this was a financial revolution. I thought we were taking back power from the central banks. But looking at these order flows, the horrific reality is staring right in the face. We aren't the revolution. We are the product. We are the exit liquidity. And if you are still holding a massive position in Bitcoin right now, thinking you are outsmarting the system, you are actually walking directly into the slaughterhouse. You need to understand how real wealth moves. Smart money, the institutional titans managing hundreds of billions of dollars, they do not open a retail app and click sell. If they did that, the market would instantly collapse by 40, 50, 60% in a matter of minutes. They would destroy their own wealth. So how do they get out? They use dark pools. They use over-the-counter, OTC desks. But most importantly, they use you. They employ sophisticated algorithmic trading strategies, time-weighted average price, volume-weighted average price. These algorithms are designed to sell slowly, methodically, drip by drip, exclusively on days when the market is green. When you see a positive news headline, when you see a sudden spike in price and you feel that rush of excitement, that FOMO, that is when their machines trigger the sell orders. They are feeding your euphoria with their distribution. Every time you buy the dip, you are absorbing a tiny fraction of a billionaire's exit strategy. They are transferring the risk of a collapsing, digitally exhausted asset directly onto your balance sheet, while extracting your hard, tangible fiat currency. They are draining the ecosystem dry, leaving nothing behind but retail investors hyping each other up in online forums, entirely disconnected from the catastrophic lack of actual capital left in the system. But where is that extracted money going? This is the part that proves the betrayal. If Bitcoin was truly the future of global finance, the ultimate hedge against inflation, why are the architects of the financial system quietly liquidating it to buy physical, heavy, tangible infrastructure? While retail investors are screaming about holding the line and waiting for the 2028 halving, the institutional elite are deploying trillions of dollars into real-world monopolies. They are buying the energy grids. They are securing copper mines, uranium facilities, water rights, and the massive data centers required to run global artificial intelligence. They are rotating out of a digital token that produces absolutely zero yield, zero cash flow, and zero physical utility, and they are buying the foundational bedrock of human civilization. They know a massive macroeconomic storm is hitting in 2026. They know that when the global debt restructuring occurs, digital scarcity won't keep the lights on. Cash flow will. Dividends will. Energy will. They are buying physical survival, and they are funding it by selling you a digital illusion. I am looking at this rotation, and it terrifies me how perfectly they have trapped the retail investor. They have convinced you to hold the heaviest bag in financial history while they quietly purchase the world. And if the institutional dumping wasn't enough to make you severely question your diamond hands, look at what the global governments are doing. The regulatory net isn't just tightening, it is actively preparing to suffocate the ecosystem. They allowed the ETFs not to validate the asset, but to domesticate it, to bring it entirely within the heavily surveilled, perfectly controlled walls of the traditional financial system. And once the massive institutional players have safely rotated their capital out, what do you think happens next? The hammer falls. The narrative will instantly flip from innovation to systemic risk, energy waste, and national security threat. The liquidity will vanish overnight. The off-ramps will be abruptly closed. Imagine waking up, looking at your screen, and realizing that the asset you refuse to sell is now trapped in a legally gray, illiquid void. Imagine the sheer, crushing panic of knowing you had the chance to exit. You had the data in front of you, but you let pride and social media conditioning convince you to hold. Think about your family. Think about the legacy you are trying to build. Can you honestly look at them and justify risking their financial future on a highly manipulated, heavily concentrated digital token when the smartest money in the world is actively running away from it? I am pleading with you, as someone who wants to see you survive what is coming. Break the conditioning. Look at the reality of the macro environment. The 2028 halving is not your savior. It is the absolute final deadline of the trap. You need to feel the urgency of this moment. The exit doors are still open, but they are getting narrower every single day. The liquidity is drying up. The whales are almost finished unloading. Open your portfolio right now. Stare at that Bitcoin balance. Stop seeing it as a religious movement or a ticket to effortless wealth. See it for what it mathematically is right now, a highly volatile, strictly non-cash flowing liability that institutions are desperate to offload onto you. You have a brief, rapidly closing window to hit the sell button, to take your capital, secure it, and pivot into the undeniable physical, dividend-paying global assets that will actually protect you in 2026. Do not be the last one holding the bag. Do not let them use your faith to fund their exit. Sell the illusion, buy the reality. In the next part, I am going to show you exactly which global energy and tech infrastructure stocks the elite are hiding in, but you have to survive long enough to buy them.
I need someone to explain this to me. I seriously need someone with deep institutional clearance to look at the exact same data points I am looking at right now and tell me that I am wrong. Because if I am right about what I am seeing in these global capital flows, we are standing on the edge of a fundamental restructuring of global wealth, and almost everyone is positioned exactly on the wrong side of the trade. I have been tracking the dark pool block trades. I have been analyzing the mandatory quarterly disclosures from the largest sovereign wealth funds and apex asset managers on the planet, and the math is terrifying. It completely contradicts everything the financial media is telling you to do. We are being told to buy the dip in technology. We are being told to accumulate digital assets, to trust the innovation algorithms, to wait for the next crypto supercycle. But when you strip away the public relations and look exclusively at the silent, underlying movement of institutional money, they are not buying tech. They are categorically abandoning it. And they are certainly not holding crypto. They are executing a massive, coordinated, and desperate rotation out of the digital layer of the economy and fleeing into something else entirely. Am I the only one seeing this? Why is there a sudden, aggressive, multi-trillion-dollar panic to liquidate hypergrowth assets? What do the elites know about the next 24 months that is causing them to completely abandon the strategies that made them billionaires in the first place? To understand this terrifying rotation, I had to dig into the global bond market schedules, specifically the corporate debt maturity walls. And the moment I saw the numbers for 2026, my blood ran cold. The mainstream narrative treats technology companies and digital assets as if they exist in a vacuum, immune to gravity. But they do not. They were built, scaled, and hyperinflated on an ocean of practically free debt. For the last decade, interest rates were essentially zero. Companies could borrow billions to buy back their own stock, inflate their valuations, and fund unprofitable growth. Crypto ecosystems thrived because there was too much cheap money hunting for any kind of yield. But that era is dead, and the corpse is about to be dragged into the sunlight. In 2026, a historically unprecedented mountain of corporate debt matures, trillions of dollars, and it all has to be refinanced. But it will not be refinanced at 0%. It will be refinanced at the new, punishingly high cost of capital. This is the trap. This is what the institutional money sees approaching. When a hyper-growth tech company or a highly leveraged digital ecosystem hits that 2026 debt wall, the cost to service their own existence will multiply overnight. They will be suffocated. The elites are looking at this chronological debt bomb, and they realize that holding highly leveraged, cash-burning digital assets is financial suicide. They are running for the exits because they know the liquidity required to keep the digital illusion alive is about to be mathematically eradicated. This realization explains the terrifying behavior we are seeing in the crypto markets. It completely validates my worst fears about digital assets. When the cost of capital reaches a breaking point, when systemic risk flashes red, institutional money does not seek out speculative tokens with zero underlying cash flow. They run from them. Crypto produces no yield, it pays no dividends, it cannot generate revenue to service debt or survive a global liquidity drain. It relies entirely on new money entering the system. But what happens when the new money stops? What happens when the massive institutions realize they need hard, tangible cash to survive the 2026 restructuring? They dump the most liquid, least fundamentally grounded assets first. They are liquidating digital scarcity to secure actual survival. I am looking at the order books, and it is a silent slaughter. They are using the retail investors' blind faith in future tech and crypto supercycles as the exact liquidity pool they need to cash out. They are leaving the retail market holding heavily inflated digital bags while they take the real extracted wealth and violently pivot their portfolios into the only safe haven left on the board. I keep asking myself, am I overreacting? But the sheer velocity of this capital rotation tells me that the people moving billions of dollars are utterly terrified of being exposed to the digital economy when the music finally stops. So where is the money going? This is the discovery that shook me to my core, because they are not just moving to cash. Cash is melting due to inflation. They are moving into pure, unadulterated physical monopolies. They are buying the absolute baseline infrastructure of human civilization. I am looking at massive acquisitions in energy grids, water utilities, global petroleum infrastructure, and industrial-scale raw materials. They are securing copper reserves, silver streams, and the massive, heavy physical infrastructure required to actually power the world. But here's the most shocking part. Even when they invest in the future, like artificial intelligence, they are not buying the software startups. The smart money is buying the nuclear power plants and the heavy energy monopolies required to run the data centers. They are buying the electricity. They are buying the telecom backbone. They are aggressively hoarding shares in companies that possess absolute pricing power, companies that operate outside of the tech bubble. They are buying assets in the Middle East, in Asia, and emerging markets, where the underlying resources are actually extracted and processed. They are abandoning the idea of digital disruption and returning to the brutal, undeniable reality of physical control. Why? Because you cannot download electricity. You cannot algorithmically generate copper. When the global debt structure fractures, the only things that will hold value are the assets that society literally cannot survive without. This is the ultimate flight to safety, and it is happening right in front of us. The elites are seeking out debt-free, cash-flowing fortress companies. They are looking for businesses that do not need to refinance in 2026 because they are sitting on mountains of operating cash. Monopolies that pay massive, sustainable dividends regardless of what the stock market does. They are building an impenetrable wall of tangible wealth to protect themselves from the incoming crash, and they are doing it entirely in silence. I am sharing this with you because the window to follow them is closing. If you are sitting in a portfolio heavily weighted towards speculative tech, or if you are holding your breath waiting for a crypto miracle, you are standing directly in the path of a macroeconomic freight train. The smartest people in the room have already left the building. They have taken their chips off the casino table, and they are buying the casino itself. I need you to understand the gravity of this data. You have to ask yourself, are you going to keep believing the mainstream narrative that everything is fine, or are you going to look at where the trillions of dollars are actually flowing and make the terrifying, necessary decision to follow the real money before you are completely trapped?
I remember the exact moment the suffocating anxiety finally broke. After weeks of drowning in the terrifying data of the 2026 debt wall and the silent institutional liquidation of digital assets, I finally found it. I found the life raft. And I cannot begin to describe the absolute relief that washes over you when you finally see the architecture of the real global economy. We do not have to go down with the ship. We do not have to be the exit liquidity for the institutions. There is a fortress. But to see it, you have to completely reprogram how you view wealth. You have to stop looking at screens and start looking at the ground. Because the smartest money on earth, the sovereign wealth funds, and the apex predators of finance are hiding in pure, unapologetic, physical reality. They are rotating trillions of dollars into sectors that simply do not care if the stock market crashes or if a digital token goes to zero. They are buying the physical backbone of the planet. And the moment you understand how these specific, debt-free sectors operate, the fear of the incoming macroeconomic storm vanishes, replaced by a massive, urgent need to reposition your capital right now. Let us talk about artificial intelligence. The mainstream media has convinced retail investors to buy highly leveraged software companies and tech startups, hoping to catch the AI wave. That is a trap. The institutions are not buying the software. They are buying the physical constraints of the software. Artificial intelligence does not live in the cloud. It lives in massive, heavy, intensely hot, hyper-secure concrete fortresses called data centers. And those data centers require an astronomical, almost incomprehensible amount of electricity and cooling infrastructure to function. You cannot algorithmically generate electricity. You cannot code copper. The elites are buying the utility monopolies, the electrical grid infrastructure, and the raw material suppliers that physically allow AI to exist. When the tech bubble bursts, when the software companies burn through their capital, they will still have to pay their power bills. The tech companies take all the risk. The energy and infrastructure monopolies collect the toll. They are the undeniable physical toll booths on the highway of the future. This is how you survive. You own the infrastructure that the future cannot function without. And this brings me to the absolute titans of global cash flow, the global energy monopolies. I am looking away from the heavily indebted Western markets, and I am looking toward the physical powerhouses of the world, the Middle East, Asia, emerging economic giants. I am looking at sovereign-backed energy infrastructure, utility providers, and telecommunication networks in regions that are physically building the future. These are not companies surviving on borrowed money. They are the entities that possess the money. They sit on the fundamental resources that power human civilization: natural gas, petrochemicals, electricity generation, and the massive logistical networks required to move them. While Western tech companies are desperately trying to figure out how to refinance their toxic debt in 2026, these global monopolies are sitting on mountains of pure, unencumbered operating cash. They have impenetrable balance sheets. They do not rely on market sentiment. They rely on global thermodynamic demand. Whether there is a recession or a boom, the world must consume energy and data. And because they are functionally debt-free, their free cash flow is distributed directly to the shareholders. Massive, sustainable, relentless dividends. This is the life raft, a fortress of cash flow that completely insulates your portfolio from the chaos of the digital markets. You need to understand the supreme advantage of tangible assets in a period of severe economic instability. When inflation runs hot, when central banks are forced to quietly print more fiat currency to bail out the failing regional banks, paper wealth evaporates, but physical infrastructure becomes infinitely more valuable. Think about telecommunication networks, deep water ports, and industrial-scale water and power grids. These are absolute monopolies. You cannot build a competing water grid or a parallel telecom network. The barrier to entry is mathematically impossible for new competitors. Because they hold absolute monopolies, they possess absolute pricing power. If the cost of living goes up or the cost of raw materials increases, they simply raise their prices to match it. Their revenue scales perfectly with inflation. They are the ultimate financial shield. You are trading a speculative digital token that produces absolutely nothing for fractional ownership in the very lifelines of society. When you own these assets, you stop worrying about central bank policies. You stop worrying about algorithmic manipulation. You are anchored to the physical reality of human survival and consumption. The relief I feel knowing this blueprint exists is profound, but it is entirely overshadowed by the extreme urgency of the timeline. The smart money is rotating right now. They are doing it quietly, carefully absorbing the available shares of these global monopolies while the retail masses are completely distracted by the crypto halving and the tech bubble. But the window is not going to stay open forever. When the 2026 debt wall hits, when the digital illusion finally shatters, the panic will set in. Millions of investors are going to realize they are holding highly manipulated digital code. And when they panic, they are going to desperately seek the exact same physical dividend-paying safe havens that the elites are hoarding right now. When that tidal wave of terrified retail capital tries to flood into these energy and infrastructure fortresses, the prices are going to skyrocket. The yields will compress. You have to be positioned before the panic begins. You have to secure your seat on the life raft while the water is still calm. We have found the way out. The tangible, cash-flowing fortress is right in front of you. But you have to take the action, and you have to take it immediately before the rest of the world wakes up.
I need to share a massive realization with you. A moment where the data finally aligned and my entire perspective on global wealth completely shifted. I was looking at a map of global capital flows, tracking the exact destinations of the institutional money fleeing the Western debt markets, and I noticed a pattern that completely shattered my worldview. The money is not just moving out of tech and digital assets. It is physically migrating across the globe. It is a geographic arbitrage of monumental proportions. While Western economies are trapped in a doom loop of refinancing toxic, highly leveraged debt, there is an entire hemisphere operating on a completely different financial physics. I am talking about the emerging markets and the economic powerhouses of the Middle East. When I looked at the balance sheets of these nations and their publicly traded infrastructure titans, my eyes went wide. The realization hit me like a physical shock. They are not borrowing money to survive. They are using pure, unadulterated sovereign cash to build the future. It is a level of financial supremacy that Western markets cannot even comprehend anymore. I felt like I had discovered a hidden continent of wealth, entirely insulated from the crash we are facing. Let us look specifically at the Middle East: Saudi Arabia, the United Arab Emirates, Kuwait, and Qatar. The Western financial media paints a remarkably outdated, narrow picture of these regions, but the reality on the ground is absolutely breathtaking. I started analyzing the funding structures for their national megaprojects. We are talking about the construction of entire futuristic cities from scratch. We are looking at industrial-scale desalination plants, hyper-advanced telecommunications networks, and the most massive, energy-dense artificial intelligence data centers on the planet. I was desperately searching for the catch. I was looking for the toxic Western leverage, the hidden debt bombs that always destroy Western infrastructure projects. But there is none. Zero. These megaprojects are funded directly by immense sovereign wealth funds and massive cash-flowing state-backed enterprises. They are completely decoupled from the Western banking crisis. They do not care what the Federal Reserve does with interest rates in 2026 because they are their own bank. They possess the petroleum, the natural gas, and the sovereign capital. It is an economic fortress built on solid rock, operating entirely outside the blast radius of Western financial collapse. And the exact same structural phenomenon is happening across the BRICS nations and broader Asia. Look at the infrastructure explosion in China, India, Brazil, and South Africa. They are aggressively securing global supply chains. They are acquiring copper mines, locking down silver streams, and physically building the maritime and rail infrastructure of the 21st century. This is not the speculative digital growth we see in Western tech stocks. This is brutal, tangible, physical growth. When billions of people transition into the middle class and industrialize, they need electricity. They need clean water. They need telecommunications and physical logistics. They do not need a new digital token. They need raw, heavy, physical utilities. The companies providing these utilities in these regions are operating at a scale that defies Western imagination. And as an investor, when you finally see this, it's like discovering a parallel universe where the fundamental laws of investing actually still work. The sheer scale of the opportunity is staggering. It is the physical engine of the world, quietly dominating the future while the West is distracted by digital illusions. This is where I discovered the ultimate impenetrable inflation shields: physical infrastructure equities and specialized hard asset trusts located entirely within these booming, unleveraged regions. I am not talking about commercial office buildings in Western cities that are bleeding tenants and defaulting on their commercial mortgages. I am talking about the sovereign-backed entities that own the very arteries of these emerging economies, the companies that own the petroleum pipelines, the telecom towers, the fiber optic networks, and the massive industrial logistics hubs. These specific assets are the holy grail of wealth preservation. Why? Because they possess intrinsic, irreplaceable physical value. If global inflation runs at 10%, the cost to replace a massive electrical grid or a deep water port increases by 10%. The physical asset absorbs the inflation perfectly. The replacement cost goes up, the barrier to entry becomes literally impossible for new competitors, and these monopolies simply adjust their utility rates to match the inflation. Your wealth is physically shielded in steel, concrete, and copper. It is a brilliant, terrifyingly effective mechanism for protecting purchasing power. The contrast is absolutely jarring. On one side of the planet, you have heavily indebted technology companies and digital ecosystems facing a catastrophic liquidity crisis. On the other side, you have debt-free, sovereign-backed infrastructure titans generating tidal waves of free cash flow and paying massive sustainable dividends. The elites know this. The smart money is quietly executing this geographic rotation right now. They are buying up shares in these Middle Eastern and Asian infrastructure monopolies because it is the ultimate flight to quality and safety. The excitement of finding this blueprint is incredible, but it comes with a severe warning. We have to be exceedingly cautious. You cannot just buy a broad emerging market index fund and blindly hope for the best. You have to be surgical. You have to isolate the specific companies with absolute pricing power, zero reliance on Western debt, and direct ties to the sovereign megaprojects. This is the secret.
This is how generational wealth will be built and protected over the next decade. We are stepping out of the illusion of the digital casino, and we are stepping into the undeniable, cash-flowing reality of the physical world.
Did you know they are doing this? I want you to take a deep breath with me. If you've been following the data we have uncovered about the 2026 debt wall, the institutional rotation out of the digital illusion, and the sheer scale of the macroeconomic trap being set, you are probably feeling exhausted. I know I was. The panic of realizing that the assets you thought were safe are actually the most vulnerable is paralyzing. It feels like you are free-falling in the dark, desperately grasping for anything solid to hold on to. But you are not falling anymore. We have found the ground. We have found the absolute bedrock of the global financial system, and I am going to show you exactly how to stand on it. You do not have to be a victim of the coming liquidity crisis. You do not have to watch your wealth evaporate in a highly leveraged tech crash or a crypto wipeout. There is a very specific, mathematically proven escape route, and the moment you understand the mechanics of this escape, the panic stops, the anxiety vanishes. It is replaced by a profound, overwhelming sense of control and absolute relief. The escape route is a mechanism of wealth generation that the financial elite have used for centuries, but they rarely talk about it on mainstream media because it is not flashy. It does not generate manic, click-driven headlines. I call it the global dividend snowball, and in the face of the 2026 trap, it is the only logical, mathematically sound strategy left on the board. We are completely pivoting away from capital appreciation as our primary goal. We are abandoning the desperate hope that someone else will pay a higher price for our digital tokens or our overvalued tech stocks in the future. That is entirely speculative. Instead, we are pivoting entirely to pure cash flow. We are going to buy fractional ownership in the unleveraged physical monopolies we discussed in the Middle East, Asia, and the global energy sector. Companies that produce the raw materials, the electricity, and the logistics that human civilization requires to exist every single day. And because these specific companies are practically debt-free, they take their massive operational profits and they distribute them directly into your account in the form of hard, tangible cash dividends. But receiving the cash is only the first step of the escape. The true power, the actual physics of the snowball, begins when you activate compound interest. When those dividend payments hit your brokerage account, you do not spend them. You do not leave them sitting in depreciating fiat currency. You immediately, systematically reinvest every single cent back into buying more shares of those exact same global monopolies. This creates a self-sustaining financial engine. Your money buys shares. Those shares generate new cash. That new cash buys more shares, which in turn generate even more cash. It starts small, like a snowball at the top of a mountain. But as it rolls down, accumulating more mass with every single dividend cycle, the momentum becomes mathematically unstoppable. It creates its own gravity. You are no longer relying on volatile market sentiment. You are relying on the fundamental, unbreakable laws of compound growth. You are building a machine that literally prints its own expansion. Now, I want you to visualize what happens to this dividend snowball when the 2026 debt trap finally triggers. When the broader stock market crashes, when the hypergrowth tech sector collapses under the weight of its own refinancing costs, and when the crypto liquidity entirely dries up, the prices of all global equities will likely drop. In a speculative portfolio, a market crash is a catastrophe. It destroys your net worth and your psychological well-being. But inside the architecture of the dividend snowball, a market crash is the greatest accelerant possible. When the share prices of your debt-free global monopolies drop, their underlying business does not change. They are still pumping natural gas, still generating electricity, still processing global logistics. The cash flow remains fully intact. But because the share price is temporarily lower, your reinvested dividends now purchase significantly more shares than they did the month before. You are accumulating ownership of global infrastructure at a massive discount, funded entirely by the company's own profits. The crash actually makes you richer faster. The very event that destroys the speculative investor becomes the exact mechanism that secures your generational wealth. The moment I modeled this math, the moment I saw how the dividend snowball perfectly neutralizes market volatility and weaponizes a crash to your absolute advantage, the fear entirely left my body. It is the ultimate financial shield. You are no longer checking your portfolio every 10 minutes, stressed about algorithm manipulations or central bank policies. You are completely detached from the chaos. You are simply watching your share count grow, month after month, quarter after quarter, year after year. The cash flow becomes a rising tide that lifts your family permanently out of the fragile, highly leveraged system. It is a feeling of absolute, undeniable safety. You have transitioned from hoping for a speculative miracle in a manipulated digital void to owning the physical architecture of the global economy. You are safe. Your capital is secure. But to build this snowball correctly, you cannot just buy any dividend stock. You need a masterclass in risk management and precise portfolio allocation to ensure you never accidentally buy into a value trap. And that is exactly what we're going to cover next. I need you to listen to me very carefully right now. Please, put down whatever else you are doing and just listen. Because building the dividend snowball we just talked about means absolutely nothing if you build it on top of a landmine. I feel like I just walked to the edge of a financial cliff, looked down into the abyss of the 2026 debt wall, and barely managed to step back in time. And now I am frantically building fences. I am setting up every possible safety net I can find, and I am begging you to do exactly the same. Do not let the relief of finding a safe haven make you careless. The macroeconomic storm is still coming. The trap is still set. And if you do not implement a ruthless, obsessive system of risk management right this very second, the market will find your vulnerability and it will break you. I am not speaking to you as just an analyst anymore. I am speaking to you as someone who is terrified of what is going to happen to unprepared investors, and I want to protect you from it. The very first rule, the absolute non-negotiable law of surviving what is coming, is the complete and total eradication of interest-bearing debt from your portfolio. I am not just talking about your personal margin account. I'm talking about the balance sheets of the companies you choose to invest in. You must view leverage and interest-bearing debt as a financial poison. It is a parasite. For the last decade, Western financial advisors told you that leverage was a tool. They told you it was efficient capital allocation. They lied to you. Leverage is a ticking time bomb attached directly to your net worth. When interest rates normalize and refuse to drop back to zero, when the cost of capital violently corrects, the companies that rely on debt to survive are going to be completely suffocated. The interest payments will consume their cash flow, then the interest will consume their dividends, and finally, it will consume the company itself. You must draw a hard line today. If a company relies on interest-bearing debt to fund its operations, you do not touch it. I don't care how high their current dividend yield is. I don't care how attractive their growth projections look on a glossy investor presentation. If they owe massive amounts of interest to the central banking system, they are fragile, and fragile things shatter in a storm. You have to become obsessed with the balance sheet. This is your masterclass in true hedging. Wall Street wants you to believe that hedging means buying complex derivatives, trading options, or paying massive fees to hedge funds. That is a trap designed to drain your capital. True hedging, elite risk management, is terrifyingly simple. You buy fortresses. You exclusively allocate your capital to companies that hold massive reserves of pure cash and operate with zero toxic leverage. You demand to see their debt-to-equity ratios. If there is a mountain of debt maturing in the next few years, you walk away immediately. And we do not stop there. You must build geographic firewalls. If you have 100% of your wealth tied to Western fiat systems and Western debt cycles, you are entirely exposed to a single point of failure. You are sitting in a house made of dry wood while a wildfire approaches. This is why we pivot to the Global South, the Middle East, and the Asian infrastructure supercycle. You hedge against the collapse of a single currency by owning the physical assets that every currency on Earth must eventually purchase. You own the energy transit routes. You own the physical data centers. You own the utility grids. If a specific fiat currency rapidly devalues, the intrinsic value of those raw, hard assets mathematically adjust upward. You are building a vault out of physical reality. You are securing your wealth in regions that fund their mega projects with sovereign cash, completely bypassing the toxic, interest-heavy Western banking system. I am being this intense. I am being this strict with you because I have seen the historical data of what happens when global liquidity officially drains. I have seen the charts of entire sectors getting wiped out in a matter of weeks because they were built on a foundation of borrowed money. You cannot afford to make a mistake here. Your family's financial survival depends on your ability to be deeply paranoid right now. You must audit every single ticker in your portfolio today. You must look at your holdings and ask yourself one brutal question. Does this company survive if the global debt markets completely freeze tomorrow? If the answer is no, or even if you are unsure, you sell it. You rotate that capital immediately into a debt-free, cash-flowing global monopoly. You build the dividend snowball, but you build it inside an impenetrable bunker. Do not gamble with this. Do not try to outsmart a global liquidity crisis using borrowed time. Secure the perimeter, lock the gates, follow the pure cash flow, and leave the debt behind.
I need you to take out a pen and paper right now. I am not going to repeat this, and I do not know how long this specific window of opportunity is going to remain open before the institutional capital completely floods these markets and compresses the yields. What I am about to share with you is the exact step-by-step hypothetical portfolio architecture for the years 2026 through 2030. This is the blueprint. It looks exactly like the internal asset allocation memos circulating among the most elite sovereign wealth funds on the planet. They are not broadcasting this on mainstream financial television because they are still accumulating their positions. They need the prices to stay low for just a little bit longer, but we are front-running them today. We are bypassing the Western debt trap entirely and building an impenetrable, pure cash cash-flowing fortress. If you want to survive the incoming liquidity crisis and build generational wealth over the next 4 years, this is exactly how the smart money is doing it. The first allocation is the absolute bedrock of the portfolio. We are allocating 40% directly into sovereign-backed energy, petrochemical, and utility monopolies, almost exclusively located in the Middle East. I am looking at the deepest, most secure pockets of cash flow on Earth. We are buying the largest national oil conglomerates in Saudi Arabia. We are buying the absolute monopolies that control natural gas processing and drilling operations in Abu Dhabi. But we are not just buying oil. We are buying the critical survival infrastructure. We are acquiring heavy stakes in the exclusive water desalination and electricity monopolies in Dubai and the massive fertilizer and agronutrient producers in Qatar. Why? Because these entities operate with virtually zero toxic debt. They are backed by the sovereign wealth of nations that are swimming in cash. They control the raw materials that the entire globe must purchase to prevent modern civilization from collapsing. You are locking in massive, uninterrupted dividend streams that are entirely insulated from Western tech crashes and central bank panics. This is your core defensive shield. The next 30% of the portfolio is allocated to the sheer, undeniable physical scale of the Asian supercycle. While the West is arguing over digital valuations, Asia is physically building the next century. We are completely ignoring the highly leveraged Western technology sector, and we are buying the physical Asian telecom monopolies. I am looking at the absolute dominant cellular and fiber optic networks in China, companies that service over 1 billion paying subscribers every single month. They generate tidal waves of free cash flow and distribute massive dividends because their infrastructure is already built and paid for. Alongside telecom, we are securing global commodity producers. We are buying the elite, state-backed offshore oil extraction companies and the heavy engineering firms that are literally building the global supply chain. We are adding positions in top-tier gold and copper mining conglomerates. These are the physical materials required to build data centers and electrical grids. When the fiat currency system experiences a severe inflation shock, the value of these heavy industrial titans mathematically skyrockets. Now, we must address the banking sector. The Western fractional reserve banking system is a systemic hazard. It is drowning in toxic derivatives and unpayable commercial real estate loans. We are allocating 15% of our portfolio to a completely different class of financial institutions. We are moving our capital into elite, zero-leverage, heavily asset-backed financial fortresses located in the Gulf region. I am talking about the premier Islamic financial institutions in Saudi Arabia, Kuwait, and Qatar. These specific banks operate on fundamentally different structural physics than Western banks. They do not engage in the reckless, hyper-leveraged derivative trading that destroys Western economies. Their financial products are backed by actual, physical, tangible assets. They operate with extremely strict, ethical, debt-free principles that make them virtually immune to the contagion of a Western credit freeze. During a global liquidity panic, these are the only financial institutions on Earth that will remain completely stable, continuing to pay massive dividends while Western banks beg for government bailouts. The final 15% is allocated to elite, highly filtered global equities and physical precious metal streams, specifically companies like healthcare titans and consumer staples that carry zero toxic debt and possess absolute pricing power. But having the right allocation is only half of the survival guide. The execution is what guarantees your wealth. We are implementing a strict, aggressive, biannual compounding system from 2026 to 2030. We are specifically selecting these global monopolies so that their dividend payouts are staggered. We organize the portfolio into 2 distinct halves. The first half pays massive cash dividends from January to June. The moment that cash hits the account, we do not hold it. We immediately deploy it to purchase shares in the second half of the portfolio, the companies that distribute their cash from July to December. And when the December cash arrives, we aggressively buy the January pairs. We are creating a relentless, closed-loop financial engine, a true snowball. This is the system. It is heavily concentrated in real, tangible monopolies. It has zero reliance on Western debt refinancing. It produces pure, unstoppable cash flow. But I am warning you, the window to build this exact portfolio at these current valuations is shutting. The elites are quietly executing this exact rotation right now. You need to look at your current portfolio today. Look at the tech stocks burning cash. Look at the digital tokens producing zero yield. You are sitting in the trap. You have the blueprint in your hands right now. You know exactly where the safe havens are located. The only thing left to do is to take the action before the rest of the world wakes up to the reality of the 2026 crisis. Do not wait for the mainstream media to give you permission to protect your family. The smartest money in the room is already moving. We need to do this now.
You have to click the link now to save yourself. We have reached the end of the blueprint. And I am speaking to you now not just as an analyst, but as someone who is physically terrified of what is about to happen to millions of unprepared families. Look at the macroeconomic reality we have just uncovered together. The massive, inescapable corporate debt wall of 2026 is approaching with absolute mathematical certainty. The institutional elite, The sovereign wealth funds and the apex predators of global finance are not waiting to see what happens. They are already moving. They are executing a silent, multi-trillion-dollar rotation out of the heavily leveraged Western financial system. They are terrified of the inflation shock. They are terrified of the liquidity freeze. And yet, the mainstream media is telling you to stay perfectly calm. They are telling you to hold the line. I am literally begging you to look past the headlines and look at the order flows. The trap is completely set, and the exit doors are shrinking every single day. If you do not restructure your portfolio right now, you are going to be locked inside a burning building with absolutely no way out. And I need to be brutally honest with you about digital assets. If you have listened to everything we just discussed, if you see the sheer magnitude of the global capital flight into physical, tangible monopolies, and you still decide to hold your massive Bitcoin position, you are committing financial suicide. I say that with zero hesitation. Holding a non-cash flowing, highly manipulated digital token while the global debt system fractures is the most dangerous gamble in modern financial history. You are falling perfectly into the trap. The whales and the institutional syndicates are desperately relying on your diamond hands. They need your blind faith in the April 2028 halving so they can use you as their personal exit liquidity. They are dumping their digital bags onto you right now, and they are using your real fiat currency to buy the physical world. If you hold that asset hoping for a miracle, when the music stops and the regulatory hammer falls, your digital wealth will evaporate. You will be left holding a string of code while the elite own the electrical grid that powers it. You have to sell the illusion before the liquidity entirely vanishes. There is exactly one legitimate, mathematically sound escape route left, and we just laid out the entire blueprint. You have to pivot entirely to pure cash flow. You must aggressively rotate your capital into unleveraged, physical, dividend-paying global monopolies. I am talking about the sovereign-backed energy titans in the Middle East. I am talking about the debt-free telecommunications giants and heavy infrastructure monopolies in Asia. These are the companies that possess absolute pricing power. They are immune to Western debt restructuring because they don't borrow money. They print it through sheer physical utility. When you buy these assets, you are building an impenetrable dividend snowball. You are forcing your capital to generate hard cash, and you are using that cash to buy more physical ownership of the globe. It is the ultimate inflation shield. It is the only strategy that actually weaponizes a market crash to your absolute advantage. But knowing this information does absolutely nothing if you do not physically execute the rotation today. I am pleading with you. Do not let this video end and just go back to your normal life. Do not let complacency destroy your family's financial legacy. You need to take massive, immediate action right this very second. You cannot buy these elite international sovereign monopolies on a standard limited retail app. You need institutional-grade access. Look at the description below this video right now. I have linked the absolute top-tier global brokerages like Interactive Brokers and other elite platforms that give you direct, unrestricted access to the Middle Eastern and Asian stock exchanges. Click those links today. Open your global brokerage account right now. Fund it immediately. Every single day you wait is another day the institutional money compresses the yields and drives up the price of these safe havens. Do not wait for the panic to start. Do not wait until you are trapped. Use the links in the description and secure your life raft before it is too late. And if you want to survive the next 4 years, you cannot do this blindly. You need the continuous, unfiltered truth, and you need it before the rest of the market catches on. I am going to expose every single movement the smart money makes. I am going to release the exact specific ticker symbols and the deep dive analysis on every single global monopoly we are targeting. But the algorithm will hide this information from you unless you force it not to. Hit the subscribe button right now. Turn on every single notification. And I need you to go down into the comments right this second. Tell me exactly what you are holding. Are you trapped in Western tech? Are you heavily exposed to crypto? Comment your portfolio and your biggest financial fear right now, because we are reading them and we are going to build the exact blueprints you need to escape. Finally, you don't have the full picture yet. There are multiple layers to this 2026 trap. Click on the next video appearing on your screen right now. Watch every single video on this channel back to back, because the financial education you receive here is the only thing standing between your current wealth and total institutional extraction. The smart money is moving. Open your accounts, subscribe, leave a comment, and I will see you in the next video.